Are you looking for the next big investment that could skyrocket your portfolio? What if I told you that two stocks have the potential to deliver massive returns in the coming years? Whether you're a seasoned investor or just getting started, understanding which stocks have long-term potential can make all the difference. And today, we've got two powerful companies that could redefine their industries and make a huge impact on your investments.
This is really the AI revolution that ultimately is really being led by, of course, names like NVIDIA and Microsoft and others, but Palantir, if you look at what they're doing here, I think this could be the next Oracle or Salesforce. I mean, this was a quarter for the ages that should be hung up in the Louvre when they print that press release off. And I think this is really the start of the next phase of growth for Palantir, which continues to be the Messi of AI. The haters hate, right? I mean, they hated this sub 100 million, sub a billion. And of course, as it got to a trillion, I think FSD in terms of in Austin, unsupervised, that's going to happen in June. That's 6 to 9 months ahead of where the street expected.
Growth stocks have the potential to unlock long-term financial success. While even the best stocks can experience short-term dips, the real wealth-building opportunity lies in the sustained growth of the underlying business. For investors seeking strong upside potential in 2025 and beyond, two stocks stand out with compelling reasons to consider adding them to your portfolio. Let's start with one company that has completely transformed transportation as we know it, Uber Technologies, ticker UBER. Uber Technologies has been on an impressive run in recent years, but there's still significant room for expansion. The global ride-hailing market is projected to exceed $200 billion by 2029, according to Statista. With such a massive addressable market, Uber continues to position itself as a dominant player with strong revenue growth and increasing profitability. In the fourth quarter, Uber reported an 18% year-over-year increase in revenue, demonstrating the company's ability to expand despite economic uncertainties. The business thrives on its multifaceted platform, which includes ride-hailing, delivery services, and shopping. This diversification enables Uber to capture more revenue streams and maintain steady growth. Uber One, the company's membership program, has experienced explosive growth, now boasting 30 million members, a staggering 60% increase year over year. A growing subscriber base not only generates recurring revenue, but also fosters customer loyalty, keeping users engaged with Uber's services. Another exciting development is Uber's foray into autonomous vehicle technology. The company is launching autonomous ride services in Austin, Texas, in partnership with Alphabet's Waymo, with plans to expand to Atlanta. This could mark a significant step toward reducing costs, increasing efficiency, and ultimately improving profitability. Uber has also made strides in food and grocery delivery through Uber Eats, further strengthening its position in the gig economy. With an increasing number of consumers relying on on-demand services, Uber is set to capitalize on changing consumer habits. As digital payments and mobile-first services continue to rise, Uber's seamless integration across different verticals positions it well for future growth. Additionally, Uber's freight division is expanding, leveraging artificial intelligence to optimize logistics and supply chain efficiency. This segment, though often overlooked, has the potential to become a significant revenue driver in the future as global trade and e-commerce continue to grow. Speaking of profitability, Uber has made tremendous strides. In the past year, the company nearly doubled its operating income to $4.1 billion. Management attributes this improvement to a combination of greater user engagement and economies of scale, leading to higher margins. Additionally, Uber is focusing on cost efficiency by leveraging data analytics and AI to optimize its services, which could further enhance its bottom line. Despite this impressive financial growth, Uber stock still trades at a forward price-to-earnings (PE) multiple of 23, suggesting that the market may not have fully priced in its future earnings potential. Analysts expect Uber to achieve an astonishing 41% annualized earnings growth over the next few years. If Uber continues executing at this level, investors could see substantial long-term gains. But before we proceed, here's a question. With the rise of automation and AI, do you think traditional industries like transportation and retail will ever be completely replaced by tech-driven solutions? Comment your thoughts below. Now, let's turn our attention to another powerhouse in the e-commerce space, Mercado Libre, ticker MELI. Mercado Libre is a dominant force in Latin America's e-commerce market, often referred to as the Amazon of Latin America. The company has built a robust ecosystem encompassing online retail, fintech, and digital advertising. E-commerce sales in Latin America are projected to grow from $180 billion in 2024 to $260 billion by 2028, according to eMarketer. With this rapidly expanding market, Mercado Libre is well-positioned for continued success. The company has demonstrated remarkable growth across all its segments. In third quarter, revenue surged 35% year-over-year, fueled by the ongoing expansion of its online marketplace. As more consumers embrace digital shopping, Mercado Libre's platform becomes even more essential in the region. One of Mercado Libre's key growth drivers is its fintech division, Mercado Pago. The service has already amassed over 56 million monthly active users, representing a 35% year-over-year increase. Mercado Pago's digital wallet and credit card offerings are gaining significant traction, fostering customer engagement across multiple financial services. Once users enter Mercado Libre's ecosystem, they tend to use multiple services, strengthening customer retention. Mercado Libre has also made significant investments in logistics and fulfillment, ensuring fast and reliable deliveries. The company operates an extensive network of distribution centers, which helps it compete with global e-commerce giants. By reducing delivery times and improving efficiency, Mercado Libre strengthens customer trust and encourages repeat purchases. Another attractive aspect of Mercado Libre is its valuation. Despite consistently delivering strong revenue growth, the stock is trading at just over 5 times trailing sales, which is significantly lower than its 10-year historical average of 10 times sales. This suggests that Mercado Libre might be undervalued compared to its long-term potential. Looking ahead, Mercado Libre is also expanding its advertising business, taking a page out of Amazon's playbook. Digital advertising revenue is becoming an increasingly important revenue stream for the company, helping to further monetize its massive user base. With the rise of AI-driven targeted ads, this segment could be a significant growth driver in the coming years. Like any investment, Mercado Libre is not without risks. Macroeconomic uncertainties and currency fluctuations in Latin America could create volatility in the stock price. Additionally, competition from international players and regulatory hurdles could impact growth. However, long-term investors who focus on the fundamentals should see strong returns as the company continues to expand and monetize its growing user base. Now let's take a step back and look at the bigger picture. If we compare Uber and Mercado Libre side by side, the numbers tell a compelling story. Uber, with a massive market cap of $166 billion and a revenue of $44 billion, is proving its dominance in the ride-hailing and delivery space. Meanwhile, Mercado Libre, despite having a smaller market cap of $104 billion, is showing impressive efficiency with a higher gross margin of 46.28%, a strong indicator of its ability to turn revenue into profit. Uber's stock price, at around $78.63, might seem more accessible to retail investors compared to Mercado Libre's hefty $2,042.22 per share. But don't let price alone dictate your investment decisions. What really matters is growth potential and profitability. Uber's lower earnings per share, EPS, of $4.58 suggests there's room for improvement as it scales its business, whereas Mercado Libre's $28.34 EPS reflects its strong earnings power in a rapidly growing market. Ultimately, both companies are in prime positions to capitalize on their respective industries, and investors need to decide whether they prefer the proven dominance of Mercado Libre in Latin America's e-commerce and fintech sector, or the innovative, expanding reach of Uber in mobility and logistics. Either way, these are two stocks that could deliver significant upside for those with a long-term vision. What does all of this mean for investors? Both Uber and Mercado Libre present compelling opportunities for long-term growth. Uber's dominance in the ride-hailing market, coupled with its expansion into membership services and autonomous vehicles, makes it a strong candidate for sustained profitability. Mercado Libre's leadership in Latin America's booming e-commerce sector, along with its rapidly growing fintech business, positions it as a powerhouse in digital commerce. Of course, no investment comes without risks. Uber still faces regulatory challenges and competition in the ride-hailing and delivery markets, while Mercado Libre must navigate economic fluctuations in emerging markets. However, for investors willing to ride out short-term volatility, these stocks could offer incredible returns over time. Before we wrap up, here's something to think about. If you had to pick just one investment for the next decade, would you go for a disruptive tech company or a solid, time-tested industry leader? Comment below, we'd love to hear your take. Are you considering adding either of these stocks to your portfolio? Do you think Uber's push into autonomous vehicles will give it a major edge? Will Mercado Libre continue its dominance in Latin America's e-commerce space? Let us know your thoughts in the comments below. If you enjoyed this breakdown, don't forget to like this video and subscribe to Simple Investing Secrets for more insights on stocks, financial tools, and wealth-building strategies. Remember, this video is for informational purposes only and is not financial advice. Always do your own research before making investment decisions. Thanks for watching, and we'll see you in the next video.